Hey, we're back. We're going to be looking at ticker symbol QQQ. That's currently on the screen right now. You can see the 1 month chart right here in the middle. It looks like it's on an uptrend. We'll look at our technical analysis. Uh, we'll pretty much confirm the same thing, I believe. The last time we checked on them was on the 19th of March when they were trading at 305, so it has gone up a decent amount. I have a resistance point marked on my spreadsheet at 336, so it looks like we have room to grow. Uh, but let's get into the news, and then we'll go into the technical analysis. So not much news, and before we get into that, I think it's going to help understand some of the news that we're going to go into. This is the weightings for QQQ, and if you're unfamiliar, that uh, index fund is the top 100 companies. So, for example, there's the S&P 500. Well, QQQ is the top 100 of the S&P 500. And so, of those 100, we have about 50% are coming from technology, and then it looks like the other ones are consumer cyclical, along with communication services. Those are at 15 and 16%. And then really we just have uh, consumer defensive, healthcare, and industrials. And all those are very small proportionally, and pretty much nothing else in the other sectors. So that was kind of surprising, but it makes sense when you have just 100 companies. So it's kind of interesting to see these percentages. I don't know if they're like splitting them, but you would think 100 companies, it would be round numbers. Um, but I imagine that's just because some people fluctuate in and out as the weeks go by because they want to try to keep it the top 100. So I don't know who's in that, say, 97 to 103 slot in the largest companies, but I imagine that's what's happening and that's what's causing these different percentages. But let's get into the news. There's not much here to share. I think if you were to watch the IWM video, which monitors the Russell 2000, and the um, VOO video that follows the S&P 500, I give a little bit of news there as well, mainly in the IWM video. But this is some of the articles that um, kind of correlate with that news and more so focus on the ticker QQQ, which is those top 100. So right here we have the investors bid up the Treasury ETFs after the quarter point rates hike. So if you're unfamiliar, the Fed had a rate meeting where a lot of people thought they might continue the zero point 0.5 basis points while they decided to go to 0.25, or I guess just 25 basis points, which is 0.25. Currently, they're trying to get from 6% inflation down to 2. The hike brings the federal funds rate to between 4.7 and 5%. This is the highest level since 2007. It goes into how um, there was, okay, maybe it's not this paragraph, but we'll read it out because it does somewhat relate. So the recent developments are likely to result in tighter credit conditions for households and businesses and to weigh on the economic activity, hiring, and inflation. And so that's kind of the goal. They want to try to flip this here. Um, but it does touch on the tighter credit conditions. And this, I believe, was amplified by the fact that the U.S. banking had a small crisis, really just with, I want to say, three small banks, nothing wildly expensive. The biggest one, I think, was SVB. I don't remember what that stands for, and I don't see it in the article, but there were a couple banks that went belly up and someone had to come and save them. So, uh, relating to that, uh, the rate hike announcement, Jerome Powell reiterated the U.S. banking sector is strong, while also suggesting the impact from the collapses and bailouts remains to be seen. And again, that's just because it was very focused in these very specific regions of the country, helping certain types of companies. So there's no reason why that would impact other regional banks unless they had some sort of connection. But assuming they didn't, considering how many regional banks there are, that should, like Jerome Powell says here, it shouldn't impact the U.S. banking sector, and I don't believe it has either. We'll cover another index fund, XLF, which does focus on the financial sector, so we'll actually be able to see how much of that is true in terms of the stock market following those companies. On top of that, we are committed to learning lessons from this episode. So what actually went wrong, and basically what he thinks the solution is. It's likely going to result in tighter credit conditions, which, you could look at that both ways. It's like, yeah, those tighter conditions are going to help the bank and ensure something like this doesn't happen in the future. But it also means companies applying to work with that bank, they might not be able to qualify in a time like this where, the word on the street is some of these smaller companies are going to need money, considering the high interest rates. And if they do, and there's tighter conditions, I mean, that's just another hurdle that they're going to have to go through. But again, we'll see how it plays out, even though that's what the recommendation is. For all we know, maybe SVB was bending the rules a little bit to allow certain customers to come in. But either way, possible tighter credit conditions are on the rise. And the other piece is tech charges. So this was brought up in, I believe, both the VOO video and the IWM catch-up video. And again, QQQ follows suit with those other two index funds where because tech is rising, again, it's very surprising because tech is having not the best earnings. They're calling it lackluster earnings in the recent months, and yet the tech giants, we have Meta, Apple, Amazon, Google or Alphabet, Nvidia's gets thrown in there. All these companies are just going crazy in the stock market when it's like, it just seems like they're very excited for the future, but right now in the present, these stocks should not be going like that, but just got to try to think ahead. And so because those companies in tech are shooting off like they are in the stock market, an index fund like QQQ, which again holds 50% in technology, they are going to profit from this. And it seems like they are. So that's the news portion. Let's get into our technical analysis. So looks like I started to draw the uptrend here. I saw a couple sets of higher lows. Again, the last time we saw this was on the 19th, which was right about here in this green bar, so right around 305. Looks like it continued to rise over that time. This pattern seems very familiar, and because there was no trading today on Good Friday, that was the end of the week. We could have looked at this last night, but I wanted to see what's going to happen on Friday. Nothing happened because that was the end of the week, Thursday. So if, however, this is the top and it's going to start to pull back, I think, and we've done this in the past, we're just going to put in a vertical line, probably space it out to a similar, like 1, 2, 3, 4, 5, 6, something like that. 1, 2, 3, 4, 5, 6. Somewhere around here, I think it might touch, say, 299, 300. That's a little bit higher than I currently had a buy point. My buy points were this green line, 277, and also at about 290. No real reason for that one. Not sure what I was seeing with 290. If we just draw that in just for a second, We'll make it blue because it's in that fair value range. 290 was about here. Yeah, in all honesty, I would have put like, oh, I know what I did. I think I marked a point like 286 was the real point, but just to kind of temper my expectations, I said, if it pulls back to 290, you know, that's more likely to happen than 286. So I believe that's what the thinking was. But right now, the best we could do is like 295 to about 299. So I'm going to draw that in. I'll just have another point of interest at 299. So we have 3 points of interest. And then the last thing I want to do for this is I want to see if we can kind of catch this seems pretty parallel, This is trading like exactly how you would think. And this one, do I have different colors here? Yeah, okay, so that gives us a little bit of runway, and I'll make this one come out just a little bit more. So those are pretty parallel. So I do think, at least what it's telling me right now, is it's trending upwards. And so we put in this yellow line because I think that's roughly when it's going to hit the next bottom of the line before kind of bouncing back up. Again, that's very loosely based off this trend. We're just trying to predict into the future a little bit. And what I will do here as well is we'll just kind of go up, down, and now here we are here. I think we'll just go something like this. And we'll even try to predict a little bit further, something like that. And we'll make this, I don't know, orange. Does that make sense? Red? No, not red. Blue, purple. I want to make sure you guys can see it though, or that I can see it on the screen. That looks, yeah, we'll just keep it the same color. But that's what I'm kind of predicting here. So possibly like 300. I think that's a good estimate. We'll kind of see how this plays out. But just a recap. So we have Invesco right here, and I'll update the date here, 4/7. So Invesco QQQ, currently at 305. I have buy points marked out at 277, 290, and 299. So not that far off from the 305. It's not a bad spot. And then resistance at 336. If the uptrend continues, I think we'll just blow right through that. So I'm not going to give too much weight to the resistance point, considering the uptrend to me has higher priority. I think also, if we want to see the lowest point, yeah, okay. And that is about, that's actually 306. That might be a little bit too, it's more like that, in all honesty. Where's this point? That's about, where are we at? 300? We'll just round it up. Okay, so nothing crazy. I just updated this from 299 to 300. But that's it. And I am seeing this slight uptrend. We'll see if that continues. If you have any comments or questions, by all means, let me know in the comments. Otherwise, please like, subscribe. I'll see you on the next one.